Hey traders, Jason with Leavitt Brothers. I hope you're well. Today I'm going to flip through some example trades and partially explain how I use MACD and Stochastic to execute trades. Okay, I did this a few weeks ago after many stocks did double bottoms. Now many of those same stocks have continued up and have given additional buy signals. So instead of reversal trades, we have trend trades. All right, so let's check them out. So here is EAT. Again, I'm not going to talk about a month ago or actually end of March when they did their little double bottoms. I'm just going to zoom into what's going on right now. Okay, so what I see on the daily chart is after the stock did a little double bottom, it moved up to a higher level here. Moving averages got close. Oh, by the way, I should say that in all these charts, I have the daily on the left and then the hourly on the right. Okay, so we have like trend line resistance here. It broke out, it came back down and tested, and then I'm looking to trade a resumption of the trend. Okay, so whereas 5-6 weeks ago I was looking at this W double bottom pattern, now I'm looking more for like an ABC, like an uptrend, pullback within an uptrend, and then a resumption of the trend. Okay, so that's what I'm looking at right now. So what I see here is the stock breaks out, does very well, comes back down, tests some moving averages. The MACD continues to trend up, and this pullback here enabled the stochastic to cycle down and then recross. Okay, so what I'm going to do is let's zoom in on this area on the hourly chart and let's see what we got. So over here on the hourly, we have a positive divergence. We have lower highs here, higher lows there. Okay. MACD crosses up from a pretty decent level. Stochastic was already up. Okay, so if you zoom in and then if you look here, you'll see that it for a couple hours it gets perched up on top of those moving averages, and then it continues up. Okay, so again, on the daily chart, I'm looking for like some sort of like up, down, up movement, and then I zoom in on the hourly to help pinpoint the entry. Here we got a positive divergence. Some good action with the MACD and Stochastic, and then it rests for a day up at a higher level. I really like that, and then it continues on. All right, next chart is Bloomin'. So what we have here is like a resistance level here. So again, I'm looking for an up, down, up movement. I'm looking for an uptrend, a pullback within an uptrend, and then a resumption of the trend. Okay, so you have the MACD is pointing up here. Okay, this pullback here caused the MACD to come back down, kiss, and then continue up, and that's what I'm looking for. And while during the pullback, the stochastic has time to cycle down, so I'm going to zoom in on this area here, see if we can find a trade. So over here on the hourly, you have lower lows, higher lows on the MACD. You have a cross here. Okay, which of course makes the MACD histogram cross. At the time that the MACD histogram crossed above zero, the stochastic was actually starting to roll over and turn down. Okay, so by waiting, a few extra bars for the stochastic to then cycle down a little bit and then cross up, you end up getting in somewhere over here. And then it took an extra day, and then eventually it worked. Now, something I watch out for is you notice here that the bounce, here you have the 21 EMA. Okay, so even if I get in here, I'm skeptical. Okay, I really like it when a stock can get above the 21, consolidate at that higher level for a day, and then continue on. Okay, so I'll trade this, but I know I still have resistance overhead to deal with. So tight stops, no bargaining right there. But this one actually ended up working out. All right, here's SIG. Let's see here. So we get MACD crosses here, stays in the crossed up direction, up, down, up, down, up. Okay, so you got while the MACD stayed in the crossed up direction, trending up, you get stochastic cycles down signals, stochastic cycles down signals again. Okay, so let's zoom into over here because I'm looking for stock goes up, does a pullback within the uptrend, and then continues up. So I come over here to the hourly chart. Slightly different formation here. I prefer the MACD histogram to stay on the same side of the zero line. Alexander Elder, who has written numerous books, probably many of you have read some of his books, he prefers the MACD histogram to go to the other side. So he likes it when the MACD histogram does this and then comes back down. I don't. I'd prefer it to just kind of come up and kiss and come down. I want two humps on the same side. I guess both work. All right, so let me get rid of those. So he would consider this a positive divergence because it went to the other side, came back down. Ignoring this opening bar here, you pretty much have a positive divergence because you have matching lows, higher lows down here. Stochastic comes down in cycles, so everything's in place. On the daily chart, you have an up, down, up. You come over here to find an entry. Everything is in place. Unfortunately, you got a gap up, and it looks like it just runs. And that's just the way it goes. The setup is still there, okay, which is why I want to show it to you. And as you can see today, the stock's actually falling pretty hard. So if you play it, you get in thinking, hey, if this thing could trend up, maybe we can get 12, 13, 14. But if it does this, then you get stopped out. And so instead of making 3 or 4 points, you end up making 1 point. That's just the way it goes. Okay, I don't want to just cherry pick the ones that work great. Some of them work really well for a day, and then they go right in your face, and you got to just take your money and move on. So, but anyways, the setup is still there. All right, here's BYND. So double bottom pattern, kind of a breakout over here. So I was looking at, let's say, up, pull back within an uptrend, and then a continuation of that. All right, so let's check that out. So on this pullback, the MAC just came down, kissed, and then bounced off. Okay, this is my kiss and cross trade where you get a kiss right here. That pullback enables the stochastic to cycle down. So we get a buy signal from the daily chart. Then I zoom in with the hourly chart. We have lower low there, higher low there. Okay, MACD crosses. Stochastic is kind of high. I'll still play it, but I don't really like it to be that high. I'd rather the pullback cycle it down so that you get like a fresh signal. Another thing I noticed here is that although you're getting the divergence here, which is nice, you also have it's below its moving averages here. So I'm skeptical. I'll play it, but I'm skeptical. But then as it over here, the stochastic moves down a little bit and then re-triggers. MACD histogram comes down and starts to expand, and at that time the stock jumps above its moving averages, hangs out for a day, and then continues on. Okay, so I'll play it here, but I'm skeptical because it's below the moving averages and the stochastic is at such a high level. It ended up working out where it like jumped, sat there for a day, and then continued on. All right, 2 more. So here is cars. So let's see what we got here. So positive divergence here, cross, MACD trending up, signal here, signal here. So if I draw a trend line here, it kind of breaks out, pulls back within the within a newly forming uptrend, and then I want to play a continuation of that. Okay, that's what all these trades are. Okay, a couple weeks ago I showed a video where I highlighted how to play a bottom pattern, and these are essentially continuation patterns. These are patterns where it's like trend up, pull back within an uptrend, and then a continuation on. So let's zoom in over here and see what we got. So you zoom in with the hourly chart, we have positive divergence. Okay, MACD crosses. Stochastic was already in the uptrend position. Unfortunately, we got a big gap up. Okay, this is the hourly chart. So it gaps up. It doesn't fill the gap much, but it does move sideways for at least an hour because you can see you have 2 hourly candles that are back to back here. So I would zoom in with the 15-minute chart, sometimes even the 5-minute chart. Sometimes these things will gap up. They'll move sideways for an hour, hour and a half. Wait for the moving averages on the shorter time frames to come up and catch it, and then they'll go. Okay, so just because it gaps up, don't be afraid. Sometimes a gap up is easier to play because the gap up, if the stock gaps up, that means it's probably strong. And if it could hold those gains, then it's definitely strong. And sometimes it's easier to chase a stronger stock than to, what if the stock just opened up here and it doesn't really have any momentum on that particular day. Sometimes that opening gap up actually starts the momentum going, and it's easier to chase a little bit on a strong stock than it is to buy a stock that has no momentum. So setup is really good. If you're comfortable playing gaps, it was there. If you're not comfortable playing gaps, then you let it go. But it doesn't negate the fact that the setup was there. And it's something I look for all the time. All right, last chart. Expedia. So similar double bottom pattern over here. Cross, kiss, cross here. Move sideways then. So I'm looking at uptrend, pullback, and then a resumption of the trend is what I'm looking for. So during this pullback right here, you get the MACD comes down, kisses its signal line, hopefully starts to expand. During that pullback, stochastic cycles down and re-triggers. So let's zoom into this area over here with the hourly chart. Okay, ignoring this candle because it was just the open. You have a divergence here, boom, boom. MACD crosses from a pretty low level, which is good. Stochastic already crossed, moving up. Stock jumps above the two moving averages here, the 8 and the 21, sits there for a day, and then continues on, which is great. I see a lot of these where it's like jumping out of a bottom. I think it's probably has a lot to do with just gaps today. But to me, as I said in like the last slide, I find it easier or safer to buy here, even though it's harder because you're, hey, yesterday you could have bought a 64 and now you're forced to buy it like 66. But if the stock can gap up and hold this level, that proves that it's pretty strong. It's better to buy a strong stock than a stock that lacks momentum. All right, so then it moves out of this area. And now it's moving back down. Okay, so hey, you'd love to, you got up, down, up. You love the stock to go up to 80, but like, what if it just goes up to 70 here and then just falls in your face? You just get out, okay? And that's just the way it goes. The setup is there. Everything looks great. And if it works, maybe you make 5-10 points. If it doesn't work, then you make your 2 points and you move on. Doesn't negate the setup. All right. So overall, same general concept, okay? I get a bias from a higher time frame chart, and then I zoom in with a shorter time frame chart to identify a trade, okay? I've only shown daily and hourly here. As I said, I often will take it a step further and look at the 15-minute chart to help with an entry. All right, thanks for listening. You can follow my YouTube channel by clicking the red subscribe button. Come check us out at Leavitt Brothers, where we offer market analysis and trading ideas to the financial community, and also check out my mini masterclass in trading. It's free. There are links below. All right, thanks again, and I will see you next time.